The final odds enhancer is the trend line break. Now, the trend line break, trend lines in general will signal a trend. Now, the break of a trend line indicates a possible pause or reversal in a trend and potentially a strong area of supply or demand. Now, we know that markets tend to go from a trending market state to a ranging market state. And this is due to really kind of price discovery and an agreed value area, right? So after a trending market, we want to see really an obvious break of a trend line. Now, when you're drawing trend lines, you need to have, obviously, this is the really the basic and first move and sequence that you need to see when identifying a trend line. So you see a low, a high, a higher low, but this higher low, right, cannot be a higher low until a higher high is made, right? So a higher high needs to break past this high for this now to be considered a higher low. And it's the same thing with a downtrend. So you have a high, a low, and as soon as prices break past the low, this then becomes a lower high, right? You cannot get a lower high until a lower low is made. Now, we're going back to the uptrend example. What happens is once we when we draw our trend line, right, the break of a trend line indicates a potential pause, right? So a ranging market state, value range, or a reversal of the trend, right? So this would be a confirmed supply level up here, because what we're expecting is really the market to go and enter a range, right? So go from a trending market to a ranging market, and the first indication of that happening is if a trend line is broken, right? And then we expect the market to potentially go into a ranging market state. So the break of a trend line indicates a possible change in the state of the market, because as we know, markets go from a ranging to a trending to a ranging market state, and really that's to do with price discovery. Now, a trend line break confirmation, I consider that to be 3 candles, both the open, high, low, and close have to be clear of a level. And it doesn't matter whether you have 3 bullish or 3 bearish or a combination of bullish or bearish candles, but you have to have at least 3 candlesticks clear of a level. So let's say, for example, we have a trend line, right? Now, I want to see 3 candles clear of the level, right? Both their and their candle wicks, right? So it has to look something like this, right? If the candle wick is touching the trend line or is above the trend line, let's say, for example, so this is what I would consider this to be clear. So let's say, for example, we had another candlestick here, right? We would count 1, 2, 3. Now we know that this trend line is not considered a trend anymore, and we could potentially be entering a ranging market, right? But if we have a candle like this, right, where it's touching, it's not open, high, low, close, clear of the level, or we even have a wick where this wick here is touching the level, right, that trend line that we've potentially drawn, then this would not count in the 3 candle sequence. This would then be the first one, right? So that would now be the first candle. This would be the second candle, and then we would have to have a third candle free and clear of this trend line for us to now decide and say that this trend line has, broken, and we could potentially be entering a change in the market state. So in an uptrend, we have to highlight the last demand candle or candles zones before a trend line or the trend line breaks. So let me get into that. So let's say, again, we have a trend line here. And let's say we have candle here. And then we've got a bullish candle. This is a bearish candle, this is a bullish candle, and then we have bearish candle, and then we get 2, 1, 2, 3, let's say, for example, right? Whereas this is a bullish candle, right? Now we got 1, 2, 3 candles clear of the levels. So then what we're looking to do is draw the supply zone from where the last supply zone before the candlestick, the 3 candles confirm that this trend line has broken. And it would be the same thing for when we look at a downtrend and we highlight the last supply candle zones before the trend line breaks. And finally, what we just to note is that we do not move the trend line, right? So we do not remove the trend line or move the trend line unless a new high or a new low is made. So in this example, sorry about that. In this example, let's say we've got higher highs and higher lows being made, right? Now what you might have is a move like this, and then a move like this, where we don't get 3 candles, right? We get maybe 2 candles or 1 candle, and then we come back above and we kind of mess about around this level, right? We can't move, we shouldn't move this trend line unless a new high is made, because this is the new high, right? So this trend line cannot be moved unless, or removed, unless we either get 3 candles, a 3 candle close to the downside, right? Open, high, low, close, or prices actually make a new high. And if prices do make a new high, then what we need to do is draw a new trend line. And that would be the potential trend line, or we would have a trend line from here to here. But this original trend line, you cannot move it, because what people tend to do is move the trend line to fit, because it's basically come down here and now it looks like that's now the trend line. No, you cannot move this trend line until a new high is made, and then that's when we actually connect the higher lows, because this is now the new higher high, right? So that's pretty much how that works. So let's get into a few charts and let's see some examples. So in this example on the dollar yen daily currency pair, we have this trend line here, and what you really want to see is really the trend to be obvious for everyone to see. Try not to trade with a really, try to plot trend lines with a really steep angle. It has to be, quite clear for everyone to see. So we just connect the high and the lower high, as this was a lower low that was made. And then you can see in this example that we have 1, 2, 3 open, high, low, close candles clear of this trend line. Once we see something like this, we know that this trend line, we pretty much could be entering into a ranging market state, or there's a pause in the downtrend. So what we want to do is we want to draw our demand zones around the areas below the trend line. So these would be the two higher low, higher highs, right? So we get a low, prices come up, prices go down, prices go up. So then we start to obviously see higher lows and higher high areas on the daily candlestick, and then we can draw our demand zones around here, right? Then we have when prices come back down into this area again, we've got our 3 candles, 4, 5, 6 candles clear of this level, and then we get price reaction and prices end up going to the upside, right? So now let's look at what an uptrend break would look like, a trend line break would look like. So we've got one on this same chart, and we can see here that we've got higher highs and higher lows being made. So let me bring up here. So we've got highs, lows, highs, right? And really, I think it has to be, like I said, the trend line has to be quite clear for everyone to see. And you can see that this is pretty much, you know, a clear uptrend, right? We've got definitely clear, you know, lower highs being made here, right? Then we get 1, 2, 3, you know, and there's a 4th candle there as well for confirmation, clear of this uptrend. So this area of supply is where we would look to draw our supply zone. And then when prices come back up into this area, we have a reaction from there. So on the Australian dollar, US dollar daily chart, we have this clear uptrend, and you can see again where we have higher highs and higher lows being made. So you got a higher high, higher lows, higher high, higher low. And actually, matter of fact, you can see, right, if I draw a line here, yeah, now we can see that this trend line, right, wasn't broken because we didn't have a few you know, 3 open high low close candles below that level. But then once we breached this high, we now draw the trend line from here, because we now have really this type of price action taking place, right? So from the trend line, we have this trend line here, and then we get a break, and we get 1, 2, 3 candles, open, high, low, close, clear of the level. And once we get that, we now can draw our supply zones that are above this level, right? And we're looking to really trade these areas if prices come back into these areas here. So you can see, as prices come back into this level here, we get a reaction, we get another reaction, and then as prices go higher, remember, the more times a supply zone is touched, the weaker it becomes. Then we get this higher level here, falls away, and then we get obviously this higher level, considering the range, if we're looking at this to be the highest level, and the more, maybe a cheap level when it's being an expensive level, or vice versa, depending on which currency pair you're buying or selling. You know, you're buying at the tops and bottoms of potential ranges from highs to lows, right? What we also have, just to highlight as well, from the higher range, we had this higher high, higher low as well. So we had this high, and then we kind of broke out and then we had 1, 2, 3 candles clear of the level, right? So you've got this previous trend line, which was here, and you've also got another trend line, which is here as well, right? From the downtrend and the demand perspective, this is where we're looking to, this is really where the obvious trend is, right? And then we'd be looking to place our demand zones anywhere below where obviously we've broken out. So we've got 1, 2, 3 candles clear, definitely clear of the level. We now draw demand zones. Again, this is going to be where our value range potentially is from the high to the low. And you can see when prices do come back down to this area, we get a bit of a reaction here, and then we definitely get a reaction here, and prices move to the upside. So when I was previously talking about, again, not moving your so let's stay on the same chart, and let's look at when we again should move the trend line, right? So a trend line really stays as a trend line where it is until a new high is made. So what we've got here is a move like this, where we have move up, move down. This area would have been the high. We get a bullish candle and we get a wick right above that that high. So technically we are in a higher low, higher high. We've made higher low and higher high market state. So we connect the lows right here and right here. Now, if we go on to next move, so this is now the new high, right? So this is the new high, and this candle wick below the low, we still keep the trend line in place, right, until a new high, unless a new high is made, right? So a new high has to break above this area here for us to now move the trend line to this level here, right? So we get a move back, and this trend line still holds, it's still holding, it's still holding, and then we technically, because we didn't get, you know, 3 open, high, low, close candles below this level to breach this level, right? So we're either going to keep this trend line where it is, right? If it breaches, right, then we keep it where it is. Or if we're going to have to move this trend line, yeah, to the new low, it has to basically breach the new high, which it does technically from here, right? You've got that high there, and we've got bullish candle, and once we make a new high, this is where and when we move our trend line. And again, we do the same thing, right? So we came down into this zone, we couldn't get 3 open, high, low closes. We're thinking to ourselves, when do we move, or do we move our trend line? Only when we make a new high, which we did. Right there. And then again, we can move our trend line to now this area here, and so on and so forth. Now, in this slide, we managed to get 1. We didn't get 1, 2. That one didn't close above. Below open, high, low, close. We got 1, 2, and then we got another candle which wasn't clear. So this trend line again still stays where it is again, unless prices make a new high, right? And it's only here, 1, 2, 3, right, where we get 3 candles open, high, low, close, then we know that this trend line, right, has now been breached, right? So we won't draw another trend line, and what we would end up drawing is a supply zone around this area here. You've got some hidden supply actually right here with this candlestick here, and we would draw our level there, right? And then you can see that there is a reaction in this zone. But what we also have, we're drawing another trend line, right, is that we've got a new break above this high here, right? So let's bring out here. So now when we're drawing a new trend line, this is where we're going to be connecting the higher lows, and then we got a higher high. And again, we get 3 candles open, high, low, close, and clear of this level. So then we would start to draw our supply zone right here, and so on and so forth. That was just an exercise in really understanding when to move your trend lines and connecting the higher lows and higher highs. So it has to breach the highs, or in a downtrend, it has to breach the lows, and then we start to move our trend lines.